In the heart of the 2008 financial crisis, a mysterious figure, or perhaps a group, under the pseudonym Satoshi Nakamoto, introduced the world to Bitcoin. This revolutionary digital currency promised a new era of financial freedom and autonomy, free from the control of governments and institutions. Bitcoin was more than just a new form of money. It represented a paradigm shift in how we think about and interact with value. Bitcoin, at its core, is a digital asset designed to function as a medium of exchange. Unlike traditional currencies, it exists solely in the digital realm, secured by cryptography and operating on a decentralized network called a blockchain. It's important to understand that Bitcoin is not simply digital cash, it's a complex system with its own rules and principles that set it apart from anything that came before. The true innovation of Bitcoin lies in its decentralized nature. Traditional currencies are issued and controlled by central banks, giving them immense power over the money supply and economic activity. Bitcoin, on the other hand, operates on a distributed network of computers, meaning no single entity has control over it. This decentralized structure makes Bitcoin resistant to censorship, manipulation, and many of the systemic risks associated with traditional financial systems. Imagine a world where you don't need banks or intermediaries to send and receive money. This is the promise of Bitcoin and its decentralized architecture. Traditional currencies rely heavily on centralized institutions to facilitate transactions, maintain ledgers, and ensure trust in the system. This reliance on intermediaries creates points of control and vulnerability, as well as inefficiencies and costs. Bitcoin eliminates the need for these intermediaries by leveraging the power of blockchain technology. The blockchain is essentially a public, distributed ledger that records all Bitcoin transactions in a secure and transparent manner. Every transaction made on the Bitcoin network is grouped together into a block and added to this ledger. Once a block is added to the blockchain, it becomes a permanent and unalterable part of the transaction history. This decentralized approach offers several advantages over traditional financial systems. Firstly, it increases security by eliminating single points of failure. If one part of the network goes down, the rest can continue operating. Secondly, it promotes transparency, as all transactions are publicly verifiable on the blockchain. This makes it difficult for fraudulent activities to go undetected. Furthermore, Bitcoin's decentralized nature fosters financial inclusion by allowing anyone with an internet connection to participate in the network. This is particularly significant for individuals in underserved communities who may lack access to traditional banking services. With Bitcoin, they can send and receive money globally without relying on intermediaries. At the heart of Bitcoin's revolutionary design lies the blockchain, a groundbreaking technology that has the potential to transform far more than just finance. Imagine a digital ledger, distributed across countless computers worldwide, that permanently records every Bitcoin transaction in a secure and transparent way. This is the essence of the blockchain. Each block in the blockchain contains a record of multiple Bitcoin transactions. These blocks are linked together chronologically and cryptographically secured, forming a chain of blocks, hence the name blockchain. This ingenious structure ensures the integrity and immutability of the transaction history. Once a block is added to the blockchain, it cannot be altered or deleted. The blockchain's security and reliability stem from its decentralized nature and the use of cryptography. Each block is linked to the previous block using a cryptographic hash, a unique digital fingerprint that ensures the integrity of the data. Any attempt to tamper with a block would alter its hash, making it immediately obvious that something is amiss. Moreover, the distributed nature of the blockchain means that the ledger is not stored in a single location, but is replicated across countless computers worldwide. This makes it incredibly difficult for malicious actors to compromise the system or manipulate transaction data. Even if one or more computers were to fail or be compromised, the rest of the network would continue to operate, ensuring the blockchain's integrity.